Welcome back. It's time now to talk about some numbers. We have Dipan Mehta, Director at Elixir Equities, who's joining in. Dipan, hi, good morning. It's promises to be a big bang opening this morning, but I wanted your thoughts on individual stocks. What do you do with a name like Zomato now? Because, the operational metrics are improving. A lot of these platform companies are now talking about a path to profitability. Do you like either Zomato or any of the other names in this space?
Sonia, good morning and thank you for having me on your show. Maybe finally we can say that अच्छे दिन आ गए हैं, especially for the stock markets and Indian investors with markets trading at all-time high and very good interest coming through in mid-cap stocks as well. About Zomato and some of the new age digital companies, I think we remain quite optimistic and positive. It's just that the time horizon has to be a little longer. You need them to be around, holding period has to be at least around 3 to 5 years from today as well, because these companies are still evolving their business model. They're trying to go towards profitability. And as and when they reach those destinations and goals, I think markets will reward them. There's no denying the fact that these are outstanding businesses. It's just that valuation is a bit of a mystery and confusing how to, value them. But by and large, there is no doubt that the long-term growth prospects are excellent. I thought Zomato numbers were very good. As for Nykaa as well as PB Fintech, the common thread, of course, is the road to profitability. And as and when that takes place, we'll see a higher and higher valuation for these companies.
Hi Dipan, morning. The auto space has been buzzing around, and Sonia just told us about two companies that came out with good numbers, relatively good numbers, and they've increased their market share as well. Eicher Motors as well as Ashok Leyland, both from different segments. Are you bullish on any of these two?
Absolutely. I think within the auto space, you have to largely be in the four-wheeler space. And only two-wheeler company that's worth mentioning is Eicher Motors because it has a differentiated product business and great export opportunity, and it's an aspirational brand. And that's what differentiates it from Bajaj Auto or Hero MotoCorp or TVS, which are going to be disrupted increasingly by EVs, especially EV scooters. On the four-wheeler side, the threat of disruption is a little less, at least in India. And we are seeing excellent numbers coming through from the likes of Maruti and M&M. And of course, within commercial vehicle space, Ashok Leyland also came out with a very good set of numbers. Valuations are reasonable. And after, I think, multi-year downtrend within the industry, we are seeing a reasonably good uptick in volumes and margins. I think this trend is sustainable for the next 2-3 years or so. So I would reckon that most auto companies are going to be great performers going forward. There could be a few exceptions, maybe like a Tata Motors or so. But by and large, this is a sector to be invested in.
Dipan, hi. Good morning. We had, just to go back to the market point, you said, Achhe Din, maybe, Diwali back with the big rally in overnight markets, and hopefully that is correct. Although we had Jahangir Aziz and Arvind Sanger this morning saying, well, maybe let's take it one day at a time and not too soon. In any case, two names, Dipan, Piramal Enterprises and Piramal Pharma, right? Both are, Piramal Enterprises sold off massively after the results. Numbers were disappointment. And Piramal Pharma, of course, has lost quite a bit since listing separately. Your thoughts?
Yeah, I think both companies, as a measure of disclosure, we are invested in, and bit of a disappointment, especially the way the NPAs are ballooning. You always thought that they were over and done with provisioning, but then some more has come through. And maybe this is the last major round of unusual provisioning which will take place as far as the financing business is concerned. And as and when we would see the retail business starting to scale up, some of the threats would reduce for Piramal. And at the same time, we would see higher net interest margins. But let's just wait and see how the actual business evolves. Pharma, I haven't really got a handle as to why the loss has come through. And on the whole, it's a great business. Very steady cash flows over there, good expansion plans, and really a strong point for the group as a whole. So a bit surprised over there. But these are, I think, great businesses. If you remain invested in them for next 2-3 years, they should turn around pretty well and start to perform well. The time to sell is gone, considering the kind of correction which we have seen in these companies. And maybe you could, if you can look at a 4-5% type of a downside from here, then the upsides could be pretty decent 2-3 years down the line.
So look beyond the very near term, good solid franchises with good pedigree. Well, Mitesh Thakkar and Shrikant Chauhan are joining us now for some technical trading ideas as well. Deepan stays on. Mitesh, what would you do? I mean, we get a gap up, about a 150, 200 point gap up. Chase it or wait for intraday dips?
Prashant, yesterday we didn't buy with the dip because we were not sure whether we'll see a recovery immediately. Though the last hour was slightly on the positive side, but the overall day was negative. And the hourly chart setup is not very positive. But with today's gap up, I think things could change. I think 18,200 would be the level where we can, I think approximately around those levels where we'll see this opening. And if that happens, and if we see continuation, then I think, we'll take a long with a 65, 70 point kind of a stop on the Nifty and look at possibly this time 18,350 being tested. But in case we open and stay below 18,200, then I'll wait for some kind of an intraday dip to buy.
But is there any reason for this dip to come, right? I mean, that's the question. Shrikant Chauhan is also with us, the EVP at Kotak Securities. Shrikant, a gap up is a given, going by what the SGX is suggesting. But then what? Do you think we can build onto our gains? Do you think we can hit new highs today? And if yes, what's the strategy?
Good morning, Prashant. Good morning, Surya. I think, the markets are going to cross 18,300 levels. And the reason is because yesterday, despite the market breadth was extremely weak, the market managed to sustain above the crucial, important psychological level of 18,000. Today, if we go through with the macro factors, then based on that, markets are going to cross the level of 18,300. That's the overall view. And as Mitesh said, yes, despite that, if the market fails to cross 18,300, then it will keep the market in the range. But broadly, we are expecting markets are heading towards the levels of 18,500. So the strategy should be to buy even if there is any correction during the day. We are now expecting 18,000 to act as a very good support for the market. And if we if we try to correlate this with the Bank Nifty, then we may even see the levels of 42,500 or 42,800 on the Bank Nifty.
Okay, all right, Shrikant, then go ahead and give us your picks as well.
In the past, whenever the market recovered from the lower levels or whenever it opened up with a gap, we saw most of the time activity in all the HDFC companies. So today also we are expecting further more activity in HDFC Bank and HDFC Limited. We are expecting HDFC Bank to move towards 1600 in the near term. We can keep stop loss around 1480. And also we like HDFC Limited, which is around 2500. There we are expecting 2650 on the higher side. And from the defense sector, we like Bharat Dynamics, which is around 960, 980. There we are expecting 1060, 1070. We should look for adding this BDL at current levels with a stop loss around 920.
Right. Mitesh, how about you? What would the stock ideas be from your end?
So I have HDFC on my bank on my list as well. I think that's clearly a stock which is showing good strength and possibly now catching some catch up with the run up which you've seen in the PSU banking name. So HDFC Bank is a buy with a stop below 1509 for targets of 1560. That about Hero Motors is a buy with a stop at 2689 for targets of 2765, and GSPL is a buy with a stop at 229 for targets of 246. I've kept one sell call in case the market does not get past 18,200 post the opening. Then we'll attempt that. GNFC is a sell with a stop at 686 for targets of 650.
Okay, all right, gentlemen. Thanks so much for that. For the time being, we'll slip into a short break. You come back, we'll get chatting with Mr. Ramesh Kalyanaraman, the Executive Director at Kalyan Jewellers. Stay with us. Welcome back. Well, let's get straight to the management of Kalyan Jewellers. It's the first corporate that we have on the show. And the company clocked in, pretty good set of numbers, 20% revenue growth versus last year. But they say that high competitive intensity, that's what led to lower gross margins for the past quarter. Key positive, though, is that Kalyan Jewellers came out with a strong update for the festive season as well, with around 25% growth. To understand more about the outlook from here on, we're joined by Mr. Ramesh Kalyanaraman, the Executive Director at the company. Hi, Ramesh. Morning. Congratulations on a pretty good showing. I want to ask you a couple of points out here. One is, what was your studded share, in quarter two? If you could give us a sense out there. Where do you see that number headed? And also your market share. You've been talking about increasing it, right? What was it and where is it headed?
Yeah, so first of all, Q2 has been good. We are extremely happy with the outcome. Studded ratio is improving year on year and quarter on quarter. If you look at a consolidated studded ratio, it would be in the range of 23%. If you are talking about India business, the studded ratio is 26% in Q2. And this is also a function of the stores which we have in the non-South region. We have been expanding outside South India, and all the new showrooms which we opened this financial year is also outside South India. And of course, there is a natural shift to the studded segment as well. So our focus will be to increase the studded ratio in the coming quarters as well as in the future years.
Okay. There is a big boom that we're seeing in weddings in India, right? And a big chunk of your earnings comes from there. I mean, I was just reading a report which said that there are 32 lakh weddings in India within the last 41 days. I'm sure you're making the most of that. So just tell us, how does this reflect on your own earnings, say for the full year as well as for FY24?
So as we have updated, the Diwali minus 30 days revenue, which we have recorded is approximately 25%, which itself comes from a very high base of Q3 last year. Q3 was fantastic last year as well, right? And we would have absorbed some of this wedding demand in the Diwali festive itself.
Okay.
But yes, November, December again is very, very crucial for the wedding segment. Our team is geared up. The inventory is also focused on the wedding segment products. The campaigns are also focused to that. And but of course, we should not keep 25% revenue growth as a benchmark for Q3, because Q3 we are already starting with a very high base. But we believe that it will be a good double-digit growth. And as a brand, our wedding segment revenue is usually in the range of 55%. So
Okay.
the target revenue is also wedding focused, and we believe that Q3 will be ended.
So when you say double-digit growth, you've done in the first half, I think, revenues of a little over 6,800 crores overall. Is that a level that you can maintain? Can you do better than that in the second half?
So usually Q3 is a bit more heavier than Q1 in terms of revenue. So that's all I can tell you.
Okay, but it's interesting. Ramesh, hi, good morning. You're saying that some of this huge wedding-related demand could have already happened, right, in the quarter that you've reported numbers for, but Q3 will be better. You'd indicated this pilot franchise stores. I think you'd opened one in, I believe, Aurangabad, and the last time you'd said that you'd open 5 more before Diwali. What's the progress there, and what are sales looking like here?
So as we speak, we have already opened 5 franchisee stores in India, and we are extremely happy with the outcome, the revenue momentum there, the operation module there, and it's almost set now. And we have now signed 6 more LOIs for franchise in India. We have also signed up the first LOI for Middle East operations franchise, and we are extremely bullish on the franchisee momentum which we are getting across. We are already in talks with 50 odd franchisee partners, prospective franchisee partners, and our expansion will be majorly driven by the capital efficient franchisee module, and that's the franchisee update.
Ramesh, is this like one large player, or each store is a different franchisee? I mean,
Each store is now different franchisee.
Okay. Is that hard to manage? Is that hard to manage, or not really?
No, but we have a ecosystem which can nothing to manage as well, because meaning it's only updates which we have to give to them, etc. Because it's a FOCO model. The store is managed by us.
Okay.
Ramesh, you've mentioned that competitive intensity, that's what's hurt gross margins. Is that easing a little bit? And also, what's the outlook on margins for the second half of this year?
So gross margins, actually we improved by around 0.2% when you compare with the previous year on year, quarter on quarter also. Quarter on quarter there's a dip, but it's not actually comparable between quarters.
Right, but Ramesh, the reason I ask you this is because you'll have mentioned there was some competitive intensity. So give us further details out, yeah? Is that easing gradually, and the margin outlook? Go ahead.
No, competitive intensity is very high, but our studded ratio increase, etc., we are able to negate the gross margin impact substantially, right? And if you're talking about the EBITDA margins, if you look at Q2 last year, actually the advertisement expenses started from a very low base, because we were just coming from the Q1 impact of lockdown. And this quarter, we have a one-time provision done. And if you negate both of them, the EBITDA margins would have been in the range of 8.1 to 8.2. And that is the way to look at it.
With 8.1, 8.2 from here on?
That's I will not be able to give a guidance, but that is the actual figure. If you negate the one-time provision which we have done and the ad expenses which was not there in Q2 last year, and we had to do this year. We had to start the campaigns also earlier in Q2 because Diwali was early this year, so we had to start the campaigns by September second week.
Little unfair, the provision I take it, but higher ad cost, we cannot exclude that. That will have to be taken into your operating margins, Mr. Ramesh. Final question, what's the debt in the books? Is there a reduction plan out there?
So again, just to clarify on the advertisement, we had to start our campaigns a bit more earlier this year because Diwali was early this year.
Okay.
So it is not an actual Q2 impact on the advertisement. It is actually a Diwali campaign which was preponed because of the Diwali which is coming earlier this quarter. And regarding, you were asking about the debt. Yes, we have a reduction in gross debt by around 100 crore and gross debt around 50 crore and net debt around 100 crore. But we have now a debt reduction plan as well for the next 3 years. Because as a brand now, as I told you, the franchisee arm is almost stabilized and we are having very good traction on the franchisee momentum. Our expansion will be now majorly driven by franchisee, which will bring in a lot of free cash in the books for the next 3 years. We will be targeting to reduce our debts, which is majorly the cash credit, which we'll be reducing because that comes with a higher interest cost.
Okay, so double-digit growth by end of FY23. You're looking at double-digit market share as well?
So market share, that it depends upon how much you are present across the country. But as a brand, we always try to become the number 1, number 2, number 3 player in the micro markets where we are. And the SSG has also been strong. It has been in the range of 7% in Q2.
All right, fair enough. Ramesh, we'll leave it there. Thank you very much. Good luck. Appreciate your time here on CNBC TV 18 as always. We'll take a break here. We'll, of course, heading to the pre-open, which is 4 minutes away. We'll also have Nilesh Shah of Envision Capital for some market chat. It's an important day, and how's Nilesh watching things from here for markets? That conversation on the other side. All right, welcome back. There's 3 minutes to go for the pre-open session, and we'll have the rates coming up for you in a bit from now. The SGX indicating a 300-point higher start. Anuj is here with how he's seeing markets from here. Anuj, good morning.
Good morning, Prashant. You know what? The Indian trader between 3 and 3:30 has to be the sharpest and the smartest trader on the street, because more or less on most days has figured out the next day's gap up or down. You've seen that continuously. Yesterday also, if you see the intraday chart of the Nifty, let's start with that actually first, because there was a 50-point rally that you saw yesterday intraday on the Nifty. So that clearly indicates that there's there it is. There was a bit of a preempt. Obviously, nobody could have preempted 300-point gap up, but the market will assume that rates have peaked now. And if you look at the US bond market and the differential between the 2-year and 10-year, it's clearly indicating that the Nasdaq led the rally with 7% move. So obviously, there's a bit of a rate sensitive rally which would be on. IT is now rate sensitive because of the valuation factor. Dollar, bond yield, crude, everything is in your favor. The only thing is Nifty opens right at that congestion zone of that 52-week high. 18,351 is a 52-week high. So that would be a good zone for yesterday's traders to book some profit. Buy on dips has worked, chasing the gap hasn't. So again, my sense is chasing the gap may not work again today. Maybe 18,050, 18,100 if the market is profitable could be a better zone. If you cross 18,400 though, then the door to 18,600, which is the previous all-time high, obviously that opens up. I think the Bank Nifty could be the one to focus on once again, because it opens straight away at all-time high today. And after that, do you chase it after 600-point gap up? My sense is perhaps not a good risk reward, but let's see. HDFC Bank did really well yesterday in the last half an hour. That was a pure expiry play. So maybe today could actually belong to the others like ICICI Bank and State Bank of India. Maybe they could lead the Bank Nifty today.
Okay, Anuj, thanks for that. Have a good one. For now, let's just waiting for the first pre-opening rate to kick in and that big bang opening. But it looks like people are just eating, traveling, attending weddings. I mean, all of these companies, right? Indian Hotels, Zomato, Kalyan Jewellers, all have done really well. Dipan is still with us. Dipan, you were telling us about Zomato, but what about other names? Indian Hotels, Kalyan Jewellers was very optimistic and the stock has done well. Anything you like here?
Yeah, I think this retail play certainly has more legs over here, and not just Kalyan Jewellers, some of the new listings like Metro Brands, Campus Activewear. I think all of these also should do pretty well going ahead. And these companies have reported exceptional numbers. They have a large footprint for growth. Balance sheets are strong, and they can grow the store count without actually impacting their balance sheet. So we're very positive on these companies. They are on the expensive side, no doubt, but then retail always has been expensive in India. But with a 3 to 5 year view, I think these companies can be at least 1.5 to 2 times their size and create a lot of value and continue to grow after that as well.
Dipan, what about these diagnostic companies? You know, we had Dr. Lal's who joined in and they said some of those competition that came in with very, very low pricing, that seems to be easing out a little bit. The street didn't buy it though, because we had Dr. Lal's, you had Metropolis, both of them were lower. Clearly the fear is that increased competition will put pressure on pricing. Your view on this space, it had a big re-rating during COVID, but the best is behind?
See, I think these are great secular businesses, but of course, there are headwinds just now in terms of competition, as well as overall, I think base effect also comes into play over here. So in a way, I think investors are better off just being equal to underweight over there. But healthcare as a sector is very interesting, and you should have allocation to that sector. But the best way to play it just now would be to the hospital companies. We heard about Apollo Hospitals, I heard on the show earlier. Narayan Rudralaya also came out with very good set of numbers. And across the board, I think whether it's Max Health or even Shalby, I think all of the hospital companies have come with very good set of numbers and very positive commentary as well. So in my opinion, I think the best way to play healthcare would be through these hospital companies. Valuations are reasonable. And by and large, I think we are going to see higher and higher operational capacity being used. So leverages also will come into play over here.
You know, the rupee is at the bottom of the screen and it's a very large move, 1.3, 1.35% on the currency, 80.71. And this compares to the close yesterday of 80.8 or so. So that's a strengthening that is welcome. Nilesh of Envision Capital is with us. Nilesh, good morning. Good to have you with us here. You know, it's a very large move overnight. How would you read it? And what does it do really for the market here? Because, I mean, we find ourselves at near highs, whereas the US market was completely bombed out. So how much of the rally we've seen overnight will we carry on here in India over the next few days and few weeks? Your sense?
Yeah, I think it's a great development what we've seen, the rebound in the US markets. India, of course, has been a stark outperformer and outlier in terms of what's happening globally. And in that context, what's happened in the US just provides a massive tailwind for India to basically break out and try and new highs. So I think that's great. It augurs well for Indian equity, and I see a strong kind of a move ahead. And the outperformance that we've seen for pretty much the entire year, I expect that to continue in the next year as well.
Okay, like someone was saying earlier, right, Nilesh, achhe din aa gaye for the market. I mean, it's a new high you're looking at, and every worry that has been thrown at this market's face has been digested. And how, I mean, we were just talking about how the SIP flows are the highest ever that we've seen in the month of October. So what do you do now? If suppose there's a big up move coming, as an investor, which are the spaces to look at? Do you put your money all in, or do you think that perhaps you'll get better opportunities through the course of the next few months?
No, what it looks like, I think, is that the outperformance that we've seen is expected to continue. It looks like that the next few months are going to be pretty strong. As we step into early Jan, we're going to be having the fresh round of allocations for the new calendar year. Indian bonds are expected to be part of the global indices as well. And in the first quarter, the government itself is targeting for privatization of ITPI, or that's what the media reports suggest. So all in all, I think it seems to be a great time. I don't think timing the market can make sense in such an environment, especially when we've seen so much of our performance and corporate earnings have been strong enough. I think in that context, it makes sense to keep allocating as you have the liquidity. Going forward, I think even in India, inflation is expected to taper off. Rate hikes are going to be probably more modest. So I think on the whole, I think it's a great situation of liquidity, strong macros and strong micros as well.
Hi Nilesh, morning. It's going to be a great morning actually for the bulls going by the initial rates that we're having. But Nilesh, I wanted to ask you about the earnings season. You know, we're halfway through this year. This was supposed to be a good follow-up year. Last year earnings was on a low base. Do you see some bit of risk to the earnings estimates, and how have you broadly read through this past earnings, because there have been some big misses that have come in?
So yes, I agree. It's been a bit of a mixed bag. There are some sectors which have been outliers. So financials, especially banking names, they've reported strong numbers. But the manufacturing names, especially areas like pharmaceuticals, chemicals, and some of the other building material companies, they've had some margin pressure, and the volume of take has not been very great. But I sense all of this is likely to ease. We're beginning to see inflationary pressures start to abate. And I think as that happens, probably as we kind of step into Q4, which is the March quarter, you'll probably see some amount of margin improvement. But I don't think that should kind of be a source of worry, because investors are going to take now a look in terms of how FY24 is going to pan out. And I think FY24 should actually be better than what FY23 has been.
Okay, FY24 better than FY23. I just want to make a mention on a few stocks that are moving quite well. By the way, the pre-opening rates have settled now. So it's a 200-point rally that you're seeing on the Nifty, and plenty of stocks that are zooming around at the moment. From the headline index, it is the IT stocks that are coming back. Tech Mahindra, Infosys are all moving up. Apollo Hospitals, Dipan was also referring to that, doing pretty well. And in the broader markets, Fine Organics is one stock which has reported good set of numbers. Samvardhan Motherson Salmon is up about 5%, post a good set of numbers. Ashok Leyland is up 3%, post a good set of numbers as well. So Nilesh, you want to leave us with some sectoral ideas? I mean, autos has been a bit patchy. Some spaces have done really well, like commercial vehicles. Can't say the same with two-wheelers. But your thoughts here?
Clearly, auto components, I think, is going to probably outperform the broad auto pack, because in the auto pack, the OEM pack, you're going to see mixed kind of stuff, because some are going to lose market share, some are going to gain market share, and then there are different kind of products or segments which will work and some which may not work to that extent. But what it looks like relatively, auto components looks to be a much better space. We've not seen any major kind of pressures that they could be facing. Demand still continues to be good for them. They're reporting good revenue growth, especially some of the tier 2 auto component names look very good. Defense names are coming out with stellar earnings, and I think that's a great space to be in. Technology services companies surprisingly have kept up in terms of their growth. They've not yet faced any headwinds. Margins have kind of tapered off a bit, but they still continue to be very strong. So I think on the whole from here, I expect tech to kind of shed its underperformance and probably be a market performer for some time, and then get back into outperformance mode sometime next year. So I think that's a great place. Valuations have come off out there, so I think it looks compelling. Second is, of course, defense, and third, of course, is auto components. So these three look to be extremely strong kind of pockets in the market.
Yeah, Nilesh, I recall a couple of months back when you joined and you said it's a good time to start getting into IT, and I think that has played out pretty well. But you're saying that things are still looking good, and maybe the stock prices have factored in some bit of the bad news. But Nilesh, today tech is one of the big gainers, and you have the metal index as well that will do well because of the softening of the dollar index. Though there are plenty of headwinds out there, do you continue to remain negative on this? Would you use these kind of bounces to get out of some of these commodity-related stocks?
Yeah, absolutely. I mean, I clearly believe that that commodities, I think we've seen the peak for them. They have kind of, in a way, bounced back from the lows that we saw in the middle of the year, but I think these should be used as opportunities to exit. These are at best trading plays. These are clearly not investment candidates, and therefore should not be part of a portfolio. And I clearly believe that we've seen the best in terms of metals going forward. Probably, yes, of course, there's some kind of softness in dollar index, which could trigger some bit of a rally there. But I think on the whole, I don't see a great environment for metals and for other commodities going forward.
All right, Nilesh, thanks a lot for joining in. By the way, the Nifty Bank is all set to have a cracker opening above 42,000 for the first time ever. These are some milestones that our markets are hitting. And the Nifty as well has positioned itself very pretty with a 250-point rally right now, 18,270. Just a matter of time. We keep quibbling about a few points here and there, right? 18,350, 18,200. But give and take everything, these are new highs, and it's something we should celebrate.
I mean, we'll be 1.5% away, Sonia.
Yeah.
So it's just nitpicking, right? I mean, we're almost there for all practical purposes. But well, you got to cross it for us to be able to put that band up to say, well, new highs. The Bank Nifty has already done that. We'll see. But you get this kind of a gap up. What do you do? That becomes the question if you're trading. Mitesh is here to tell us that. Mitesh, you've got the pre-open telling you it's going to be a 1.33% higher start. So just kind of wait for intraday pullbacks or what? Anything new?
See, I think, we open above 18,200 level. So I think the Bank Nifty will also give a fresh breakout. I would bet on continuation happening, if not immediately today, maybe, after half an hour of stability. But I think overall, by tomorrow, I think we should see higher level. That's a stronger odds. So I'll go with taking long positions with the gap.
All right. Thanks a lot. What about what about the stock idea?
So the HDFC Bank could be a good bet with a stop at 1509 for a first target of 1560.
Okay, let's revisit some big moves now. Ashok Leyland is the one that's having a dream run this morning. Let's not forget, it is already up 25% this year. Very strong numbers coming in, a beat on all parameters for Ashok Leyland. 85% revenue growth, margins have improved, and it's returned to profitability, almost 200 crore profit versus a loss of 83 crores. Now, the market share for Ashok Leyland has also hit 32% right now. Jefferies has a buy with a target price of 180 rupees. They say that the gross margin expansion is something that is looking very good. It's expanded 130 basis points quarter on quarter, and the EBITDA per vehicle that they earn has gone up 47% quarter on quarter. Of course, the tailwind of lower raw material prices could continue in Q3 as well. So big move there.
Oh, absolutely. So one of those big names to track now. The big fall in the rupee, the dollar has also taken the pressure off the INR, and we are seeing a very large outsized move right to the word open on the dollar rupee. Lata is here to tell us more. Lata.
Yes, a big rally is seen in the rupee. It is at now 7-week highs. And this is in concert with all Asian currencies, largely because, of course, of the dollar fall. Now, the added advantage for India is that because of the return of risk appetite, one sees more dollar inflows as well from the FPIs. But it's possible that in this leg, the Indian rupee may underperform the Asian currencies like the Korean won. One, because those underperformed all this while, and therefore there is more reason for them to rally. Also, they are more dovetailed to the rise in the US economy, and that's why the rupee is also seen as a safe harbor, and therefore at a time when all currencies are rallying, we may rally a little less. The chances in the immediate run are that exporters will panic because your 83 is nowhere around the corner, and they may come in and sell. So a bit of overshoot all the way towards 80 is expected. Where the Reserve Bank comes in is what the market would be most interested. The last time the Reserve Bank bought was at 78.50. So we will have to see when they draw the line in the sand. After all, they will also want to refurbish their reserves. A quick word on bonds as well. 10 basis point fall, and why not? The bond yields in the US have fallen by almost 35 basis points, and therefore a sentimental fall in Indian yields is also expected. So now the bond prices are also at 7-week highs. But here again, there are auctions, and there are auctions coming. Fertilizer deficits are high. So perhaps the rally will be limited, but a rally nevertheless.
Okay, a rally nevertheless. Thanks a lot for that. We're just heading into the market opening in a couple of minutes. Mitesh, I wanted your thoughts on a couple of stocks. KPIT Tech has come back in a big way. TVS Motor has been gaining a lot of ground lately, and Indian Hotels, good set of numbers. Either of these names that you like for a follow-on trade?
I think, Indian Hotels is something which I've been tracking very closely, and unfortunately, I don't have a view on KPIT Tech. So Indian Hotels is something, which went through a good correction, and then, now we are seeing some kind of move starting here again. My sense is that the stock is well placed to possibly get past 345, 350 zone, and once that happens, it will be fresh highs, and the stock should give you a target around 375, 380. So very positive view over there.
Okay, just about 30 seconds left for the market opening. Ashok Leyland is your big mover in trade right now. And just keep an eye out on the 52-week high for the Nifty, right? Looks like, I mean, we could get there through the course of the day. You never know. The 52-week high is 18,351 and we're not even 100 points away from that. So all set for a big bang opening. The Nifty Bank is set to open above that 42,000 mark for the first time ever. Global cues are very positive. The FI flows have dried up a bit, but nevertheless, the momentum has been really strong in this market. So expected to open sharply higher this morning. Brace yourselves for that. Here's the first tick on the index, looking pretty, 250 points higher now on the Nifty, 18,283. Led by Infosys, up 3%, Tech Mahindra up 3%, Wipro up 2.5%, and TCS. So IT is coming back in a big way this morning. HCL Tech as well, up 1.5%. Apollo Hospitals posts its numbers up about 3%, so a big move coming in there too. And the Bajaj twins, Bajaj Finance and Finserv, are both up about 2.5%. Gaining steady ground, the Sensex is up over 800 points right now, and the Bank Nifty also charging ahead. Talking about the Bank Nifty, SBI, ICICI Bank, HDFC Bank, all rallying anywhere between 1 to about 2%. There's not a single Nifty stock in red. That's the kind of momentum that this market is seeing.